The bond market plunged during remarks by Fed Chairman Kevin Warsh Wednesday, and that in turn caused the biggest sell-off in the Dow in over a year. Was it something the chairman said or didn't say? Joining me now, Morgan Stanley Wealth Management CIO Lisa Shalett. Lisa, great to see you again. Thanks for coming on.
Absolutely, my pleasure.
All right, so I think the most dramatic line I saw was a Thornburg analyst who told the Wall Street Journal that the bond market punched Kevin Warsh in the face. You would give those bond traders a red card?
Not necessarily.
Okay.
Look, fundamentally, my view is that Kevin Warsh said and did exactly what he's been telegraphing for several months that he was going to do, which is be extraordinarily patient, wait for his task forces to come back with recommendations about how to potentially improve the data sources that the Fed is using around measurements of inflation, productivity, et cetera, to help set monetary policy. I think he was clear that he's not a fan of forward guidance and that he was going to continue to, progressively reduce the statements and the content of the pressers. And I think that's what he's doing. And just because the market, wants him to hike doesn't mean he's going to hike. So I know that a lot of folks said, hey, we're disappointed that you're not hiking and proving out your inflation fighting credentials. But I think he did something else. He said, I am my own man and I'm going to do what I said I was going to do. So I'm in the camp that says the bond market is being a little bit riotous at the moment. And so we would actually be buyers of some of this oversold duration.
Well, and there's also now sort of the second derivative talk about what he said is pulling it back a little bit and saying maybe he was hinting that there's some hawkishness still in the man. What would Lisa Shalett do at this point? Do you think the Fed should raise rates before the end of this calendar year? And what do you think the Fed will actually do, given the fact that we don't see forward guidance?
Well, look, I think what a lot of the investors in the market sees, which is we have a inflation print that is consistently running above the 2% target. This is an extraordinarily strong economy producing extraordinarily strong corporate profits. The labor market is stable, and this market can absolutely positively tolerate higher rates. Now, that having been said, I don't think he's going to go there unless the data pushes him, right? The market is trying to push him, but I think, he's going to continue to do what he said, which is be led by the data and broaden that data set as the task forces complete their work in January.
All right, let's turn from bonds to stocks. You turned a little bit more bullish this week, and you're sticking to your S&P target of 8,300. I think it's about 12% over where we are now. What do you see out there that you like, especially what particular areas of the stock market look attractive?
Yeah, what was exciting to me about this week is I do think we finally had some capitulative action really wringing out the excesses, wringing out the momentum trade, wringing out some of the leverage in the market, first of all. Second of all, I do think that investors are really starting to press and differentiate between and among all the players in the AI ecosystem, and starting to really press management teams on ROI. And that, to me, is a very good thing. And the fact that we're starting to see this differentiation and dispersion between and among the names is, I think, a very, very healthy sign, and one of the things that we've liked. A third thing is that overall earnings are broadening and are extraordinarily strong, and that gives me opportunities to buy, to confidently buy across many, many sectors. So we are looking at a handful of the hyperscalers, hardware names, and some semiconductor names that have come down, but we're complementing that with more defensive names. So we are looking at consumer staples, some healthcare, some real estate investment trusts, some REITs. And, you know, in the more cyclicals, we've liked housing, we've liked financials.
Alrighty, we are going to have to leave it there, Lisa Shalett, but that's a lot of information. Thank you so much for sharing it. GLP-1 drugs are gaining ground in more than just weight loss. Could they become medicine's next everything drug? More on that next.